This video is brought to you by Brilliant. At the end of last week, the price of gold hit an all-time high of $3,000 per troy ounce. This was the culmination of steady and rapid appreciation that began in earnest last year, and it's the most expensive that gold has been in real terms since at least 1980. So, in this video, we're going to look at gold's recent surge and try our best to explain what's driving it. Hint, it's probably not a good thing. Never miss an episode and always feel in the loop by subscribing and ringing the bell. So let's just start by looking at how the price of gold has moved over time. Between roughly 2013 and the pandemic, gold traded between $1,000 and $1,500 per troy ounce. For context, a troy ounce is a unit of weight that's specifically used for measuring precious metals like gold, silver, and platinum, and is equal to 31.1034768 grams, or about 10% heavier than a regular ounce. Anyway, the price rose after the pandemic, and between 2020 and 2023, it traded between $1,500 and $2,000. However, since really about early 2024, the price of gold has been rising pretty rapidly, with an especially steep appreciation since the start of this year. Although some of this most recent spike is to do with the dollar's recent decline. Anyway, at the time of writing, gold is currently trading at around $3,000, which is the most expensive it's ever been in nominal terms, and the second most expensive it's been in real terms. In other words, if you adjust for inflation and the fact that a dollar doesn't go as far as it used to. The only time that gold has been more expensive in real terms was way back in January 1980, when prices briefly spiked to an all-time high of $850 per troy ounce, equivalent to about $3,500 today, before easing to about $500 in March. This was due to a variety of factors, including speculative demand, the creation of the European monetary system, which was partially backed by gold, and the Iranian Revolution in 1979, which led to a massive increase in demand for gold in the Middle East. So, why is the price of gold so high at the moment? Well, we can see at least 6 clear reasons. First, some of the most recent spike is actually to do with the dollar, which has experienced a steep decline in recent weeks. The so-called dollar index, for instance, which measures the dollar's value against a basket of currencies, shows that the dollar has been on the decline since peaking in January, and is now back down to where it was in October last year. Because gold is usually measured in US dollars per troy ounce, when the dollar declines, the stated price of gold goes up, even if demand for gold hasn't actually increased. You can sort of see this if you look at gold's price in some other currency. In euro terms, for instance, while gold is still well above its historical average, it's slightly down from its peak, which happened in late February. Second, some of this is down to speculative pressures, as investors looking to make a quick buck bet on gold's continued appreciation. The CME, for instance, which is the exchange where most gold futures are traded, reported in March that a record number of investors were buying gold options contracts that essentially amount to a bet that the price of gold was going to continue to rise. Third, some of this is also because American investors are worried that future Trump tariffs, which could either apply universally to imports into the US or be extended to specific precious metals like gold, are going to make it harder to move bullion into the US, so they're buying it up now and bringing it into the US. In fact, so much gold is flowing into the US at the moment that there's now a sort of queue at the Bank of England vaults for anyone who wants to get their gold out, and stockpiles in New York are currently at an all-time high. Fourth, some of this is down to regional factors. For instance, there's been an increase in Chinese demand in recent years, as investors look for a safe place to park their cash while the Chinese equity and property markets sort themselves out. Similarly, there was a steep increase in Middle Eastern demand last year in reaction to the escalating regional crisis that kicked off after October the 7th, but escalated in October last year when Iran and Israel started trading direct missile strikes. This isn't dissimilar to what happened in 1979, when the turmoil of the Iranian Revolution sparked a regional rush for gold that pushed up global prices. Fifth, some of this has been driven by central banks diversifying away from the dollar. For context, the dollar is the world's reserve currency, which is in large part because it's widely considered the safest currency available. While this is still the case, and it's hard to really see which currency could replace the dollar anytime soon, it's nonetheless true that the dollar isn't as attractive a reserve asset as it once was, especially for central banks. This is both because the American economy is looking a bit shaky at the moment, and because America's ever-increasing enthusiasm for sanctions has made some investors and some central banks worried that their dollar holdings could be seized by a future American administration. This is why central banks have been moving away from dollars and dollar-denominated assets like US Treasuries into gold over recent years. According to analysis by Bloomberg, central banks, especially developing countries, have been increasing their gold holdings since at least 2022. But the sixth and perhaps the overriding reason that gold is reaching all-time highs is that markets are anxious. For context, gold has long been considered the ultimate safe haven asset for investors anticipating some sort of crash. This is for a number of reasons. First, it's been a universally accepted store of value throughout history. Second, there's no risk of default, unlike with government or company-issued debt. And third, its value can't be easily eroded by inflation, unlike cash, at least in the fiat money era, where cash is just printed by central banks and not tied to some other commodity, as it was from 1945 until the early 1970s. This is why its value goes up when investors are nervous or are anticipating some sort of crash that would undermine the value of normal money. And, well, the fact that gold is reaching an all-time high is pretty clear proof that investors are indeed really nervous. These nerves clearly preceded Trump. After all, gold's been on the rise since at least 2024, but it's at least true to say that Trump hasn't made things better, and there's clearly a sense in corners of the market that Trump's unorthodox economic policies have increased the risk of some sort of economic crisis in the near term. So, should you be worried? Well, we're clearly not qualified to predict the next economic crisis, but it doesn't look like a great sign. At TLDR News, we're always trying to help you learn more about the world around you. Luckily for us, our sponsor this week, Brilliant, shares this same commitment, with thousands of lessons in maths, science, programming, and AI. And not only that, their interactive lessons teach you by doing, instead of just asking you to mindlessly memorize stuff. This helps you build your critical thinking skills and become a better thinker. For instance, Brilliant's newly updated maths courses help you establish a strong foundation in algebra. It then helps you build on this, teaching you how to conquer calculus, all while maintaining an emphasis on problem solving and reasoning. The thing I like best about this, though, is that their mathematical courses help you develop your mathematical intuition and fluency, skills that you can use in the real world. As we've told you before, data skills are absolutely necessary for navigating the modern world, and Brilliant is the best way to get them. To try Brilliant for free, visit brilliant.org/TLDR or scan the QR code on screen, or you can click the link in the description. You'll also get 20% off an annual premium subscription.